If you are a PSC Limited Company contractor providing your professional services to a client, or a business owner that engages with freelancers and contractors and needs some guidance in navigating the upcoming April 21 IR35 rules, then keep watching. In this video, we'll be covering a brief recap on the new IR35 rules coming into force on the 1st of April 2021, obtaining a status determination statement, how should you operate inside of IR35, what's the difference in average taxation between inside and outside IR35, what can you do with your limited company if you are caught inside IR35, some suggestions, how can you stay outside of IR35, and finally, what about schemes promising to pay you 80 to 90%. Before we get started, be sure to hit the subscribe button as well as the notification bell to make sure you're kept up to date with all of our latest content. This really helps us to produce more helpful videos and to get you free quality advice from real qualified accountants. Now, we're not going to go into too much detail on the new rules as we've already done a video on this, which you can watch by clicking on the card above. However, the salient points of the new off-payroll IR35 rules coming into force April 2021 are, from this date onwards, it is your end client or engaging entity, like an intermediary or agency fee payer, that has to determine the IR35 status of a contract with you, the contractor. In order to determine the IR35 status of a contract, a status determination statement is required, which we will cover in the next section. The new rules apply to the private and public sector for all end clients that are not classified as small or who are based wholly overseas with no UK presence. Before we continue with today's video, we're thrilled to be launching the Accounting and Tax Academy membership site this year. We'll be posting downloadable resources, tax tutorials, and exclusive courses that you won't find anywhere else. And the best part of it is, it's absolutely free to join. Head to the link in the description box below to find out more. In order to obtain a status determination statement, your end client or intermediary fee payer will need to use an appropriate tool and require your input too. HMRC CEST tool has been developed by none other than HMRC, and some end clients may suggest this tool is used. However, and in our opinion, it is questionable whether HMRC's tool is yet fit for purpose or even impartial. As an alternative, we recommend QDOS. Now, we are affiliated with QDOS, so you are aware, but we have done so for a good reason, and that is we believe they are impartial and more thorough than HMRC CEST tool, not to mention the in-depth knowledge and experience they have on IR35. And remember, you may be starting a new contract before April 2021, in which case the chances are your end client will need to make a status determination before this date, particularly if the contract assignment is expected to run past this date. If your contract assignment has been determined inside IR35, then you may have a choice as to how you wish to operate for this particular assignment as follows. Number one is to use your existing PSC Limited Company. Number two, use an FSCA approved umbrella company. We've included a link in the description box below for approved members. Use your agency or intermediary's own payroll solution, or finally, you may be given some other option. Now, the first thing you need to check is whether your end client or intermediary insist upon you using an approved umbrella solution, whether one on their master services list or their own payroll solution. And if this is the case, then you won't have a choice in the matter. Which leads to the question, what should you do with your PSC Limited Company? Well, there is no blanket or linear answer to this, and a lot depends on your thinking, circumstances, and outlook of the future. Stay tuned for our section, what can you do with your limited company if you are determined inside IR35? A very popular question, and no doubt one that you will want to explore should you be in the position of being provided different rates and options by your end client or intermediary, or just want to know how much more tax and national insurance you are likely to pay inside IR35 compared to outside IR35. This could help you negotiate a fee rate to help you determine a suitable take-home pay. It's fair to say that if your contract assignment is determined inside IR35, your average rate of tax and national insurance combined will be higher depending on your revenue levels. To do a quick and easy comparison, we recommend an online calculator in the description box below that will help you grasp the numbers. And there's no doubt you will be thinking about negotiating a rate or fee that partly or wholly compensates you for the additional taxation and national insurance in order to achieve a take-home pay similar to if the contract fell outside of IR35. Now, please remember, IR35 is assessed and determined on a contract-by-contract basis. Just because one contract assignment falls inside of IR35, it does not necessarily mean all your future contracts will too. However, if a particular assignment has been determined inside IR35, then you may be thinking about what to do with your PSC Limited Company. Here are some of our thoughts for your consideration. Number one is to close it down through a voluntary strike-off or a formal liquidation, such as a member's voluntary liquidation, which route is dependent upon your company and your personal circumstances, and whether you have in excess of £25,000 of distributable funds. Click on the link in the description box below for more information on this particular route. Number two is keep it open for the foreseeable future. Now, generally speaking, you will probably want to consider keeping your PSC Limited Company open for the following reasons. You think and feel you may get outside IR35 contracts in the future. You may be getting multiple contracts simultaneously with a mixture of inside and outside IR35. If your end client is classified as a small business, in which case the new IR35 rules are exempt. You want to repurpose your PSC Limited Company and use it for a side business, hobby, or some other trading or investment activity. You want to time the closure of your limited company at some point in the future for a specific personal or business reason, or really any other reason that pertains to your specific circumstances. And finally, keep it open and place it in dormant status. But there are rules as to what dormant status is. Click on the link in the description box below to find out more on this. Now, this is a very pertinent question, and we have been asked this question numerous times. In short, there is no magic formula here, and we know it's not what you want to hear, but it's reality. However, if you want to stay outside IR35, understandably, then the following is what you probably should consider. Number one is to contract for a small company under the definition of the Companies Act 2006. The small company exemption will then apply. Number two, now HMRC have articulated that if an end client is based wholly overseas with no UK presence, then the new IR35 rules will not apply. However, if your client has any presence in the UK, such as a subsidiary, then the new rules could apply. Number three, work with your end client to structure your working arrangement where the substance of your relationship will point you outside of IR35. But this needs to be genuine and not a contrived arrangement just to avoid IR35. And this really does depend upon your end client or intermediary too. After all, the onus from April 2021 is wholly on them. And don't forget, they are probably under pressure too, because if they get the status determination wrong by not taking reasonable care in their assessment of an SDS, then the underlying PAYE taxes and national insurance liabilities could end up sitting with them. So you can probably understand their caution too. This is another question that has popped up time and time again, and we can fully understand your desire to want to optimize and minimize your tax bill. Now, we're not here to judge such schemes or suggest or provide validation as to whether they are right or wrong, but to help you make an informed decision on them. First of all, and I say this respectfully, apply some common sense. The government introduced this IR35 legislation, and their primary objective was to supposedly level the playing field between contractors who behave like employees but pay tax like the self-employed at lower rates, and employed folk who pay income tax and national insurance at higher rates. So if a scheme comes along promising you take-home pay rates similar to those you could have achieved through your limited company outside of IR35, or if not better than that, then ask yourself, do HMRC really endorse these? Who is taking the risk here? And remember, the basic rate of income tax in the UK is 20%. So if a scheme is promising you 90% take-home pay, does this even add up? Secondly, there is recent history with the EBT, known as the Employee-Based Trust Disguised Remuneration Schemes, so many contractors got sucked into over the last decade or so. Eventually, HMRC caught up with this and all the contractors, often resulting in hefty back tax bills, interest and penalties for the contractor themselves. And what happened to the promoters of these schemes? You guessed it, absolute nothing. And lastly, follow the link in the description box below to Spotlight 45 by HMRC. This will tell you HMRC's view of such schemes and what they plan to do should you get involved. I hope this video has helped you gain a more in-depth understanding of IR35 and provide some guidance as to how you can possibly navigate it and taking you one step closer to knowing your numbers. As always, let us know in the comments your thoughts on today's video or if there are any topics you'd like us to see us cover in the future. Finally, be sure to like and subscribe as this really does help us to get our content out there. This is Tony D'Angelo for the Accounting and Tax Academy. Thanks for tuning in.